journey in your last two. I swim with tea when they turned in. The staring down to mute. And can lend a pole that sunky died.
January 15th is one of the most important dates in the year-end payroll planning process. Many practitioners focus heavily on the planning that occurs before December 31st. But experienced professionals know that planning alone is not enough. The real question is whether those plans were actually implemented. That is why January 15th serves as a critical post-year-end checkpoint. Let's follow the timeline shown on the slide. The process begins on December 31st, the corporate year-end. This is when year-end tax planning decisions are made. Financial statements are reviewed. Taxable income is analyzed. Salary and bonus strategies are discussed. Compensation decisions are made. At this stage, the planning is complete. But planning by itself does not create results. The next phase occurs during the first 2 weeks of January. This is the payroll implementation period. During this time, bonuses may be processed, payroll entries may be prepared, deductions may be calculated, and administrative tasks begin moving from planning into execution. This is often a very busy period for accountants, bookkeepers, payroll staff, and business owners. Then we arrive at January 15th. Notice how the slide highlights this date. January 15th is not important because of the number itself. It is important because it represents a professional verification point. By this date, practitioners should be asking critical questions. Was the bonus actually paid? Was payroll processed correctly? Were tax and CPP deductions calculated properly? Are payroll remittances planned and understood? Is the documentation complete and organized? These questions shift the focus from planning to verification. Many payroll problems occur because people assume something was completed. A bonus was discussed. A payroll run was expected. A payment was supposed to happen. But nobody actually verified that it occurred. Professional practice is different. Professionals verify. They review. They follow up. And they confirm that the actions supporting the tax plan have actually been completed. That is why the message at the bottom of the slide is so important. January 15th is when professionals verify execution, not just planning. This distinction may seem small, but it has a major impact on the success of year-end payroll strategies. A well-designed plan that is never implemented creates no benefit. A properly executed plan creates results. The purpose of January 15th is to provide a structured opportunity to identify missing tasks, resolve problems early, and ensure that payroll-related decisions are moving forward correctly. In many ways, January 15th acts as a quality control checkpoint. It helps practitioners catch issues before they become larger problems later in the year. The key lesson from this slide is simple. December 31st is the planning date. January 15th is the verification date. And successful payroll planning requires both. Tax planning creates the roadmap. January 15th helps ensure the journey has actually begun. The first 2 weeks of January are some of the most important days in the year-end payroll process. This is the period when planning transitions into execution. And by January 15th, professionals should be reviewing a series of critical payroll items to ensure everything is moving forward properly. This slide presents a practical completion checklist that experienced practitioners use during this period. The first item on the checklist is bonus payment status. If a year-end bonus was planned or declared, this is the time to confirm its status. Has the payment actually been made? Has it been scheduled? Has it been processed through payroll? Remember, a bonus deduction strategy only works if the bonus is ultimately paid and documented correctly. The second item is payroll processing. All payroll entries related to year-end planning should be reviewed. This includes salary adjustments, bonus entries, payroll runs, and any corrections that may have been required. The objective is to ensure that payroll records accurately reflect the compensation decisions that were made during year-end planning. The third item is deduction calculations. Professionals should review tax withholdings, CPP contributions, and any other payroll deductions to confirm that calculations were performed correctly. Small errors identified early are much easier to correct than errors discovered months later. Next comes documentation. This is an area that many people overlook. Supporting records should be organized and maintained as the process unfolds. Payroll reports, bonus calculations, resolutions, payment confirmations, and supporting schedules should all be available and properly filed. Good documentation makes future reviews significantly easier. The fifth checklist item is CRA remittance planning. Payroll deductions create remittance obligations. By January 15th, practitioners should have a clear understanding of what amounts must be remitted and when those remittances are due. Proactive planning helps reduce the risk of missed deadlines and unnecessary penalties. The final item is T4 preparation readiness. Although T4 slips may not yet be prepared, professionals should already be thinking ahead to reporting season. Payroll records should be organized in a way that supports efficient T4 preparation and year-end reporting. This reduces stress and helps avoid last-minute problems later in the process. Notice the message highlighted at the bottom of the slide. January 15th helps prevent year-end payroll problems from becoming year-end payroll crises. That statement captures the purpose of the entire checklist. The goal is not merely to complete tasks. The goal is to identify issues early, while there is still time to address them. A missing payment, a payroll error, an incomplete file, or an overlooked remittance obligation is much easier to manage in January than it is several months later. This is why experienced practitioners view January 15th as more than just another date on the calendar. It serves as a quality control review point, a checkpoint where planning is tested against reality, a checkpoint where assumptions are replaced with verification, and a checkpoint where professionals make sure the year-end payroll process is moving in the right direction. The key lesson from this slide is simple. Good payroll administration relies on review, follow-up, and verification. A structured January 15th checklist helps ensure that important tasks are completed, problems are identified early, and year-end payroll planning produces the results it was designed to achieve. This slide illustrates one of the most important differences between average payroll administration and professional payroll administration. The difference is not knowledge. The difference is verification. On the left side of the slide, we see the reactive approach. This approach is built on assumptions. The practitioner assumes the bonus was paid, assumes payroll was processed, assumes documentation exists, assumes remittances were handled properly, and assumes everything is progressing according to plan. The problem with assumptions is that they are often not tested until much later. Weeks or months can pass before someone discovers that a payment was missed, documentation is incomplete, a payroll entry was entered incorrectly, or an important deadline was overlooked. At that point, corrections become more difficult, more time-consuming, and sometimes more expensive. This is why reactive payroll administration often leads to last-minute surprises. The practitioner spends valuable time fixing problems that could have been identified much earlier. Now let's look at the professional approach shown on the right side of the slide. Notice the difference immediately. The professional does not assume. The professional verifies. Instead of asking whether everything is probably done, they actively confirm that it is done. They verify the status of bonus payments. They review payroll entries. They confirm supporting documentation. They check remittance requirements. And they assess readiness for upcoming reporting obligations, such as T4 preparation. This process transforms uncertainty into certainty. Rather than discovering problems months later, issues are identified early while there is still time to address them. Notice the transition shown in the center of the slide. The movement is from assumption to verification. That single shift represents a major change in professional mindset. Many payroll problems are not caused by a lack of technical knowledge. They are caused by a lack of follow-up. The practitioner understood what needed to happen. The client understood what needed to happen. But nobody confirmed that it actually happened. Professional practice closes that gap. The comparison at the bottom of the slide captures the difference perfectly. The reactive approach says, "I think it's done." The professional approach says, "I verified it's done." Those two statements may sound similar, but from a risk management perspective, they are completely different. One is based on hope. The other is based on evidence. And evidence is what professionals rely upon. That is why January 15th serves as such an important review point. It provides an opportunity to replace assumptions with confirmation, to review completed work, to identify missing items, and to ensure that year-end payroll planning is progressing as intended. The final message at the bottom of the slide summarizes the entire lesson. Professional practice relies on verification, not assumptions. Successful practitioners do not simply trust that everything was completed. They review, they confirm, they document, and they verify. That disciplined approach reduces errors, improves compliance, strengthens client service, and helps ensure that year-end payroll planning delivers the results it was designed to achieve.